We have Tushar Pradhan joining us, Chief Investment Officer at HSBC Global Asset Management India. Tushar, great to have you with us here on the program. Thanks very much. First thoughts from on this huge run that we have going. Is it just a matter of kind of tracking, not tracking, but because you can't really track flows on a day-to-day basis, but there seems to be a lot of money coming to the market here with a lot which is happening globally, other emerging markets falling off the wayside because of various reasons. We've been talking about that here on the channel as well. Your thoughts on the outperformance we have?
Yeah, so I think India clearly is a different market than most other emerging markets at this time for a lot of reasons. Obviously for the reason that we continue to remain a domestic focused economy. And our economy currently is showing all signs of pretty strong growth. And as a result of which corporate earnings are also slated to be pretty significantly higher than last year and expected also to remain strong in the next year. So the fundamentals are good. The problem always with the markets is not only just the fundamentals, but the external situation as well and the global environment. As we know, the global environment is a little suspect at the moment because of the significant up move in interest rates in the US led by the Fed. And that has given rise to some fears about an impending recession in the US. Some people comment that it may just be a matter of timing, but it is likely to happen. If that happens, obviously that is not good news for the global economy and obviously every emerging market linked to the economy, which is in the US as well. India, on the other hand, being a domestic economy is slightly insulated from all of this. Of course, markets can never be insulated, but at least economy is the way they go. They are slightly insulated to an extent. But I think given all of that, the current up move is a combination of factors. One is that we've seen a significant outflow of money from the FPIs so far. But quarter to date, we are seeing almost upwards of $8 billion which have come in just in a matter of 3 months. And that clearly will have an impact on valuation. So I think it's a combination of the fact that the fundamentals look good, the money is coming in after a long hiatus, which is the kind of outflows that began in November of last year. So it's a combination of all of that, I guess. So we should enjoy it while it lasts.
Okay, we should enjoy while it lasts. Tushar, hi, good morning. So, since you referred to the domestic economy stocks, the sector of the last 1 month has been cement. Do you have large exposure to cement names? And what's your view on what's happening right now? Is this, of course, after the entry of Adani, the stocks have just got re-rated. Not just the Adani stocks themselves, but others as well. And the market believes almost everything will be acquired. But your view?
Well, cement has seen a significant cycle, I would say, because as we entered into the COVID period, clearly there was a significant loss of value because obviously all sort of construction activity just came to a grinding halt. On top of that, at the start of the year, we saw a significant increase in commodity prices, including coal and electricity and energy generally just went up through the roof. So the margins for this business, already battered by very low demand, was a significant dampener for these stocks for a long time. As we see, and as I was mentioning about the return of growth in our economy, I think there is a lot of pent-up demand, both from the construction housing perspective as well as infrastructure, which is likely to happen in the next few years as such. And as we see that because of this significant downturn in this industry for some time, there was a lack of energy in terms of adding to capacity. So we now have a situation where if demand comes back, we will realize that the supply that we have right now will just about be adequate. So we are talking about capacity utilizations going up. And as and when it starts to touch a 75 to 80% capacity utilization as an average across the industry, these companies start to get re-rated. I think corporate acquisitions and actions continue to happen from time to time, but that cannot be any lever for a sustained re-rating in the companies forever. It could come as a strong infusion of capital inside of the industry, which is making participants pretty happy about the overall situation. So I think that would be my take on that.
Okay. How are you approaching some of these other spaces like, say, mid-cap IT or IT as a whole? I mean, we were speaking to the analyst earlier on who said that, not only margins, now they're concerned about top line as well, as client spends might wane as they head into a recession in the US. What would you do with that pack now?
Yeah, so that's another interesting one because especially when you talk about mid-cap IT, it is a lot more stock specific than industry related. When we look at the large caps, obviously industry related headwinds are, the expected downturn in the US economy and then the likelihood of lower spending on IT, etc. We've been through this before, but I think throughout this period, I think the IT companies have delivered with only the sentiment going up and down. So I think here what you're likely to see is that since most of the IT businesses in India support mainline activity in the US, it is unlikely that unless there is a very large portion of discretionary spend in the whole IT budget which gets lopped off and which are linked to our companies. I think without that, we will continue to see earnings grow. We will continue to see strong quarter-on-quarter accretion. However, as you mentioned, the margins have been suspect because of the rising costs, but that will plateau out at some point of time. And as we go into the next few quarters, I think it will become clearer whether the IT spend scenario that has been painted right now is likely to sustain. Given all of that, I think the call should be on valuation. We've seen mid-cap IT actually go ahead of large-cap IT by multiples in the last few months. There will be a period of kind of self-correction there, and markets generally tend to self-correct as well. But I think the mid-cap story is more to do with individual companies and individual growth vectors. So within that pack, I think one should look for significant, strong growth trends, which are unique to any one company. So I won't think that the entire pack is going to move together because the general headwinds in the sector are well known. But I think if there are any specific reasons to get excited, say for example, travel. There has been a lot of travel across the world and we've seen a tremendous boost to tourism earnings. And software companies which lock into logistics or go into the transportation sector in some way or the other can expect a significant change in their fortunes, etc. So it's really more to do with individual companies at this point.
Okay, Tushar, a word on PSU banks. SBI has been the best outperformer in the entire large cap space.
Yeah, I think when you hunt for value, clearly there is a lot of relative value here. The debate always is that value something which is going to get re-rated, or will it continue to remain value? In other words, is it a value trap? Clearly, I think there is going to be a change in terms of how we view these businesses. Certain public sector banks, clearly with a lot of focus and tremendous management behind them, will take advantage of whatever the private banks have been taking advantage of. It is a competitive market. And if they come up with products and services which match the expectation of customers, the bank is a bank. It is part of a wonderful, vibrant economy that we have. So why should the PSU banks generally just be painted with one brush? So I think companies which are willing to take that initiative, companies which are willing to take that investments into the area where it is client-centric, I think you'll see a significant upside for valuation there. It remains to be seen whether that is to the expectation of customers, or for that matter, it takes away market share from existing private market players as well. But I think that's a space which is worth looking at. And I think clearly some companies are ahead of others and some are market leaders in any case. So they will naturally get re-rated when the volume of business starts to go up.
Right, Tushar, we'll leave it there today. Thanks a lot for joining us. Good talking to you as always.